Well, I got a serious video for you today. Cue the fire. You're also going to want to put on your thinking cap because it's going to get difficult, because something just flashed in the bond market. And the banks that are holding, well, they don't hold your money. You think that they're holding your money. They're freaking out. And the mainstream media will not catch this, only me, because Skylar, can you bring the screen down for me, please? Okay, boss, I got this. Hey, boss, why are you drinking urine? Well, Skylar, it's actually green, and the green screen, my audience can't even see me drinking it. But Bank of America, now this is what you're going to get in the news. Oh, sorry, Skylar. Bank of America CEO, everything, which we'll go into that, points to a recession this year. Bank of America CEO, Brian, he's telling you, which sounds breaking news, really bad. But you guys want to know what's bad? That would be that. And you're like, what is that? This, my friends, is the 1 month T-bill that just collapsed underneath the 200-day moving average. But not just that. Look at that. It was just at 5%. Now, I'm going to show you why this is so important. It just went from, here, I'll zoom in. I'll show you it just collapsed 36%. That's a lot. Now I'm going to do my best to try to explain this to you, because I taught elementary school, junior high, high school, and college. So I'm going to keep this simple. It's a sheet of paper like this. It's a T-bill. It's a bond, and it pays interest. And you can buy them, I can buy them, and your bank buys them. And they are hotter than Bitcoin right now. Okay? So the yield is dropping. That means the value of it is going up. People want it. Okay? So if people really want it, oh, well, it's only 1%, right? But if it's like no one wants it, how about we give you 100%? So there is such a demand for liquidity. And I've told you this, that there is going to be a crisis, and you are going to be able to spot this crisis in the bond market. This is the biggest thing in the entire world. This is the oil that runs the engine. Now, the Fed has completely lost control because they are trying to control this side, the short end of the yield curve. They're like, okay, well, if you give us money, okay, your deposits that you put into your bank, check this out, we'll give you 5%. Actually, it's 4.8% right now. It'll be 5%. So they're telling all of your banks, which you can't get. It's only the banks, only the insiders can get 5% on your deposits that you put into the banking system. Now, here is what is frightening. The Fed, I'm just going to round up, it will pay your bank 5%. And, okay, for your deposits, we'll give you 5%. But your bank also wants collateral. So the Fed has to, this is called reverse repo. Okay, it's $2.something trillion in this right now. Okay, every night, take your money or money market funds, whatever, and the bank gives it to the Fed at a 5% rate plus collateral. But here's where the dumpster fire is. Banks are saying, we don't trust you, Federal Reserve. We're not going to give you those funds, okay? We're actually going to take a loss, and we're going to go for a 1 month T-bill at what did it drop down to? 3.22 yesterday. 3.22. They could get 3.22. That's terrible. Go park it at the Fed. And you get 5% plus collateral, and they won't do it. They don't trust them. Now, okay, and if you're new, you're probably totally lost. You're like, wait, so when I take my money and I deposit it in my bank, it's not there? No, it's not. And this isn't even money. I know, right? It's actually just a sheet of paper. But your bank has to do something with it. Wait, they don't just leave it in my account? No, it's gone. It's poof, it's gone. Do one of three things with it. They buy mortgage-backed securities. They buy some bonds, right? They can flip it to the Fed and get 5%, but they're not doing it. And the Fed is even giving collateral, and they're not doing it. Your bank would rather take your digit. Ooh, hey, thanks. Appreciate that. Oh, you like You like this stuff. You're never going to get this stuff in mainstream media. They're like, the stock market's up today. The stock market's down today. No, you're not. Imagine if someone went on the news and like, whatever, CNN. So today we're going to talk about the bond. And they're like, and click. It's what's on the next channel. See, I have to come here, light myself on fire, and try to give you like the back door of how this all works. But guys, they don't trust the Fed right. I know you're like, well, I don't trust the Fed either. But they can get 5%. And they're not doing it. So the Fed has completely lost control of the front end. I mean, the next move is like, 6%, 7%, 8% in the Fed funds rate, like, or whatever they offer in repo. No, 10%, 20%. And all the major banks are like, no, we'll take a 1-month T-bill because we don't trust you. Oh, also just FYI, you can call your bank right now and get 5%, 4.99. That's on a 3-month. That's it. Matures in 3 months. And then you got to go, oh, what do I want to do? Move it to a 1-year, 4.7, a 2-year, 4.1, 10-year, 3.5. Oh, that's inverted. Kind of doesn't make sense, right? You're like, so if I loan the bank my money for 10 years, I get 3.5. But if I just do it for 3 months, I get 5%. Okay, I'll do 3 months. See, now you understand that the system is a dumpster fire right now, and it's going to snap because we have a liquidity crisis. Well, not yet, but it's coming, okay? Now, let's go over to VIX. I hope you're buckled in. You may have to rewind this. Okay. So, the VIX at all-time lows right now. See little finger that I put right there? Just to mark it. You haven't seen this since December 2021, okay? You want to know where the stock market was at right here? Well, I'm glad you asked. Here, I'll star it for you. All-time highs since forever. Forever. It's never been higher than that. Higher than yesterday, 420. But look how low the VIX was. And you see, low VIX, high stock market. Low VIX, we should be way up there breaking all-time highs. And this is it. This is all that we can put in. And we're at like lows. So hey, my friends, when the VIX, which it will, rocket ships to the sky, your lovely little beauty pageant here called the S&P 500 or the Dow or the Qs is going to tank. Yes, but bravo, the market went up today. You guys are so cute. I love this. Let me just show you. On the S&P 500, you are putting in, it is not confirmed yet. This is a rising wedge. Strike 1. Bearish. Oh, but wait, there's a strike 2. Wait till we get to strike 3. I'll show you strike 2. But if you want to learn about this, link in the description. This is my bear market course that I'm teaching you right now. This would be found in my bear market course. When I say rising wedge, you're like, I know what that is. Strike 2, head and shoulders up. I'm going to show you where it plays out. But before I do, take advantage of the discount that I have down below. Because as you know, I continue to raise my prices on my bear market, on my swing trading courses. And sometimes I raise and I go down a little bit and then I go down. So $297 for whatever course you want. That would be 70% off. Pretty darn good, but tomorrow only 60%. Okay, so looking at this, let me zoom in and show you how this plays out on the S&P 500. Then I'm going to show you something else. Yes, but bravo, you're down less than 1%. It's like nothing. I took out a short for, this is like the trade number 5, right? Long, close position, make money, take out short, make money. Long, right? And then you get to the top. This is what I did. I went up, took profit, down, shorted, shorted, took profit, up, right? Shorted, and then we came up and I'm like, you're not beating this one. You got to clear that red line. I'm not seeing it coming. I think I'm about 90% accurate. But yes, I could be wrong. And as a trader, it's just probabilities and you just got to go with like, wow, that actually didn't play out as a rising wedge or as a head and shoulders. So you got your left shoulder, you see that? You got your head, and then you have your right shoulder. See? 1, 2, 3. This is a neckline going up. But necklines are like this. Yeah, this one's different. All right, now I'm going to draw that. It's kind of wonky, okay? I'm just doing this right now. It's not like I did it earlier and I measured it perfectly. I'm just kind of pulling this all together for you. Let's go here. Let's go here. Let's go here-ish. Head and shoulder. And you could see this thing right here. That's your neckline. To measure this, let me grab this here. I'm going to go to the top of the head to the neckline right about, let me get this thing lined up right there. Okay. But first, what's going to happen? Yeah, that plays out. That's going to retest. Yep, there you go. We're going to retest all-time lows from this Head and Shoulders. You are correct when you say market went higher. Right. This needs to, one, break this orange line right here. See that dotted line? That's your wedge. That's your rising wedge. Break this one, okay? That's strike, we're going to go with, let's see. We got rising wedge, strike 1, Head and Shoulders, strike 2, breaks wedge, strike 3, break neckline, strike 4. But hey, if you say market's going to rip to the all-time highs, place your bet, my friend. I mean, I do. I come on this channel every single day. Not just that. Rise and shine. Bear market course. My daily watch list. My family, my friends, the people that I care about to hopefully help them make digits go higher every day. Here's the bear market stocks. Here's the bull market stocks. So that one is, the bear market is $20 a month. It's what, 70 cents a day? I don't know. The other one's what, 99 cents a day. And that is, link in the description, that is what I'm trading. And I take everything in my noggin and I try to give it to you. Let me give you another one. Oh, it's there. Good. Perfect. I am going to overlay this. This is the value line geometric index. If you want to rewind that word and then go find it, you do you. But what I want to show you is, if you come back here, this is basically where the market should be at, and it always follows it. And then when there's a divergence, you know which one's going to win, right? So look at this. Perfect. Oh, right, exactly. Oh, wait, what the frack is happening here? It'll also tell you when you're going to get highs, like, woo, we're going up. It went up. But guess what, kids? Divergence, we're going down. Also, someone gave me a super chat yesterday. You guys can do that on the comment section. Thank you guys for always doing that. But he wanted me to tell his son Ricardo to get off your butt and make some money swing trading because dad bought you the course. So that way dad can go to work, and Ricardo, you make dad's digits go higher. And I know this because when I taught high school, the parents would do that. And they're like, listen to everything that Mr. Bravo has to say. And if he's trading it, you tell me. But anywho, back to the geometric index. When to worry? Well, watch the value line geometric index. And as this blog ends this, as previously noted, the last bear market got underway in October 2007, while the AD line topped out June 4th. You see, it's like it predicts. It has given ample warning in advance of the majority of bear markets, especially the good ones like 1929, 1973, 87, 2000, 2002. Our advice is to remain in a 100% invested position. And I'm going to agree with you on that one, right? Always be in. You always, money, you got to go to work. Sorry, Dad, you just can't put your son to make, well, I guess, yeah, move dad's money. In our opinion, there is little doubt that we are in a bubble comparable to the .com. If history is any guide, it is going to end badly. But the truth is, it doesn't have to end badly for you because you're in it going up, you're in it going down. You make money on both sides. So when you say, oh, wait, market went down, man, this is like an Iron Condor day. Actually, Iron Condor week. Sorry, I just spoke options. I'm not allowed to do that. U.S. tech stocks have run their course for now and face a 20% to 40% correction. That would mean your portfolio goes up by 20 to 40%. Because all you have to do is learn how to click one button and click short or sell. Or I got one more for you. The like. You can click that one. Works 100% every time. And I can't click it. It's only on your side. So sorry, you guys, if this video was macro and very complicated, but sometimes I have to come on this channel and you know what? Put on the teacher cap and go, this is frightening. That is why you like and subscribe to this channel, because I'm going to give you something that there's no way. I mean, unless you see it in mainstream, then please let me know. Also, learn how to look at what I see. See, as a teacher, you raise your hand, I'm like, Google it. As the worst teacher, because I show you how to do it. Here's how you do it. Now you have to do it and then get better than me. That's why I had to create courses, so you can learn it and then you go past me, and then I'll have you on the channel and I'll pick your brain. But at the end of the day, let's make our digits go higher and enjoy our lives, right? Because you use those digits to go on vacation, or your whole life can be vacation. You could just work on vacation, or you don't even have to work, whatever that's called. You just have fun. That's what we do on this channel. I love you guys. And oh, shoot, it's the weekend. I wonder if I should take the weekend off. I guess we'll have to wait and see.